Good morning and welcome back, Consistency Commando. We're trying. Welcome to December. Hope everybody had an absolutely amazing holiday. Ate too much, took some naps, had some fun, all that good stuff. Um, Welcome to the room. We're gonna do it. We're gonna have fun, guys. All the lawyer stuff, right? It's an educational room, guys. The whole goal is to learn. Whether you are new or old, whether you are Ninja Trader or TradingView, guys, hey, Luciano, it's all about learning, guys. It's all about having this amazing tool and learning how to swing that hammer, right? So what we're going to do is we're going to slow it down. We're going to do a 101. We're going to go through the basic rules, guys, and we're going to have fun doing it. Dag nabbit. But first, we're going to check news. Forexfactory.com/calendar. It's always hard to get back into the groove, right? I'm like, man, what am I supposed to say to these people? 10 a.m. ISM Manufacturing PMI, guys. That's high impact, which means that it could upset the market. It could make it spike or bump or jump or any of those things that we don't really want it to do. So it could disrupt our patterns. And really that's kind of what we're doing here is we are taking patterns that can be proven to win more than they lose, um, and learning to turn those patterns into our trades. The advantages get turned into trades, and that's what we're going to focus on this week, guys. And I'm gonna talk slow and deliberate, and we're gonna have some fun. Um, and then 8 p.m. Fed Chair Pal speaks. That's weird. And we're gonna do it, like I said, on both platforms. Whoops, that's not both platforms, is it? We're gonna talk about NinjaTrader. We're gonna talk about TradingView. And the goal is not going to be, whoops, one second, my slideshow's on the wrong monitor. Um, we're not going to talk about the money. We're going to talk about the process that helps us find the money. Um, and I say us, and I mean you. Trading is an individual sport, guys, and you've got to learn to read your charts. This is what I've been doing for years in this room. I don't call signals. I don't tell you when to enter. I don't tell you when to exit. What I do is I teach you to read your indicators. And we're going to start on NinjaTrader. We'll work our way into TradingView. But guys, you're going to get a checklist. And that checklist is only going to have three things on it for entry. We're going to focus heavily on entry because great entries create manageable trades. It only takes two charts, regardless of the platform, guys. And you're going to build a foundation, and you're going to learn to read your indicators, and you're going to recognize advantages, and then those advantages translate into your trade. So chart reading is about 90% of the typical day. Active trading is about 10%. And guys, this holds true whether you're excited to take a trade or not, whether you want to make money or not. You're going to find that about 90% of your day is doing nothing. I'd like you to accept that from day one. You will understand through your chart reading where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These concepts likely to continue are going to be entries for beautiful trend trades. Where the market is likely to go is going to help with profit taking. And guys, where the market is likely to stop, that's going to help you embrace that 90%. Those are what we call termination conditions. And a termination condition is literally a line that you know about before the market gets to it that could shut down everything good going on in your favor. So we're going to break it down, and we're going to talk about these things. And my classroom has been the same for as long as I've taught it, guys. You've got to learn the rules. If you don't learn the rules, you're going to struggle. So rather than looking for the trade, Look for the rules that create the trade, guys. Learn them individually. There's only three, and then you'll piece them together. Everybody can simulate. You can practice. There's no reason to trade live money during a learning process, guys. It's like the flight simulator for you pilots. Um, you can't knock 120 people out of existence if you make a mistake on simulator. You can't lose money on simulator. All you can do is become a better chart reader and a better trader. And then the first step to becoming a confident trader, ASAP, guys, is post in the room. My favorite thing about this classroom is when you guys ask questions, when you guys present a picture, and most importantly, when you say, hey, Mark, this is what I saw. I saw a trend trade. I saw that the triggers were up and that price was on the strong side of the triggers. And when price got back to the right side of those triggers, I took an entry. And from that entry, I got paid at trouble. I got paid at the next level of trouble. I made a quick $575. Did you notice anything, Mark, about my read? Did I read the large chart correctly? Did I identify trouble correctly? Did I leave myself room to trouble as I took this trade? Do my exits make sense? And Victor, high five. You did it wonderfully. And guys, sometimes you do it wonderfully, but sometimes, and I would say more often than not, if you're a brand new user, you might make a mistake. And that's okay. Mistakes are part of the learning process. But the easiest way to overcome them, the easiest way to move beyond them is to have them identified and then be given a fix. And that's what I do, guys. We'll discuss everything. The hope is that you don't practice the wrong trades. Most people don't believe it when I say it, but when you get lucky on simulator, guys, it's a short-term victory. The dopamine kick is real. You get excited. You're like, yes, I made $10 million on simulator. And then you go live and it doesn't seem to translate. Your luck seems to run out. So try to practice the correct rules. You're gonna fudge it. We all do. But post in the room and we'll talk about it. The next thing is keep it simple. It says simplify your two trades in your plan. So when we talk about simplicity, we're talking about Nexgen. I hand you a plan. How could you be expected to have one as a brand new user? So guys, this plan is a stepping stone in your learning journey. It's designed to teach you how to read your indicators. We're going back to that concept. You got to learn how to read them so that you can use them. And the trades in this plan are designed to optimize your chances of success. One of my favorite sayings is that confidence comes from the memory of success, guys. So when we talk about this high probability trend trade on NinjaTrader, we're talking about a trade that typically wins 70 to 80% of the time. When we're talking about the high probability, we're talking about the trend trade on TradingView. We're talking about a trade that can be proven to typically win up in that 70% range, guys. And it's going to be through study, simulation, class feedback, and practice. You're going to write your own plan. But until you can, Nexgen provides you a plan, whether it is for NinjaTrader or whether it is for TradingView. So I'm going to drop both of those in the room right now and make sure that you do, in fact, have a plan. Ta-da! There it is. Drag them off to the side, download them, make sure that you read them, and make sure you ask if you have any questions. And then the idea is that you're going to learn the looks that you're going to commit to. The market moves in patterns. The market has a memory. I don't remember who said that, but it's true. It may be a Mark Douglasism. The market just repeats itself all day long. What Nexgen has done for you is they've used the T3 indicators to define a pattern that can be proven to win more than it loses. So your trade is nothing more than a pattern. You've got to learn what it looks like. And the better you know it, the easier it becomes. And that's where the second part is. It says use your spreadsheet. It says track your real-time performance in the spreadsheet. I've taken that very basic tracking sheet and kind of amped it up a little bit, guys. The first tab on the spreadsheet I'm about to drop in the room, whoops, is the basic rules. So a high probability trend trade combines three rules: strong triggers, no terminations, and an entry. And it's the three rules individually that are pieced together to create the pattern. So learn them individually. I can't stress this enough. Learn how to identify each rule individually. And what happens is you begin to speak out in terms of advantages. You begin to say things like, wow, this is a market that's going to be difficult to stop. This is a market where there's absolutely nothing in the way to impede its forward progress. And I can identify in no uncertain terms where the market is most likely to continue, and I can use that for an entry. There's about 500 pictures of client trades showing that pattern, entry sequences, management, a place for you to build your plan, and then finally the trade tracking sheet. And this is what this references, guys. Tracking your real-time performance, because what you're going to do is every time you take a picture, you're going to annotate your chart. You're going to talk about the advantages that get you in. You're going to talk about where you entered, why you entered. You're going to present it in the room the same way Victor did. And then we're going to look at it and we're going to say, hey, this is perfect. Goes in your plan. That's what Victor would have gotten on that one. Or we might say, hey, you traded into a termination condition. You've traded into an area that had the potential to stop that market. Even if you win the trade, the feedback is still going to address the potential concerns to make sure that you know about it, to make sure that you're able to manage assertively. And what you're going to find when you go back and study these, and I'm going to show you exactly what your morning routine should be, is you should look at the trades from yesterday. So the trades from Wednesday, maybe Tuesday, and ask yourself what worked, right? What seemed to be putting me in the money more often than not? What's the pattern? What's the combination? What are the advantages? And you should also ask yourself, and I really think as a brand new user, this is your focus. What didn't work? Am I trading in determination conditions? Am I getting in too soon? Am I exiting too late? Am I fighting? And guys, what you're going to notice is that on your spreadsheet, there's a feedback section from class. And when you begin to see things repeat, that's your thing. That's the thing that's holding you back. Very often, we don't see it during the adrenaline. We don't see it with the anxiety of winning or losing that tends to accompany first-time traders. But I do, because I have no stake in the game. I have nothing to lose. All I have is a picture where you said, Mark, this is how I read my indicators. This is what it looked like. Coach me. Give me feedback. Tell me what you see. And guys, I promise you I'll do it every time. And if you go through this little process, 2 to 3 minutes each morning, hey, this is what worked, this is what didn't work, this is keeping me relaxed, having momentum and nothing in the way, just I feel good about it. But when I see those lines and I trade into them, I start to move my stops, I start to get jittery, guys. This little study each and every morning will accelerate the learning. There's no doubt in my mind. I've been doing this for years. So learn the rules, simulate your trades, guys. And please post in the room and ask for feedback and take a lot of pictures. The more pictures you take, and I'm gonna open up mine, and the more you edit or annotate your pictures, this is what I saw, this is what it is, this is what I had, this is where I entered. What you're doing is you're creating this correlation between what your eyes see and what it means to you in terms of looking for advantages and looking for trades. And just, it's not even a brag. It's just, it is what it is, guys. 18,300 pictures in my Snagit file. 18 plus. There's a reason I can read charts quickly. There's a reason I can recognize advantages quickly. Get in the habit of snapping a lot of pictures. And now we're just going to go through it, guys. We're going to talk about 3 rules. We are talking NinjaTrader right now. We're going to go to TradingView second. So whatever platform you're on, make sure that you're listening for that platform, guys. But the NinjaTrader high probability trend trade, this is a trade that you can prove. You can test it. You're going to have everything you need to test it. Typically wins 70 to 80% of the time. It's only 3 rules. And when a rule is true, it creates an advantage. It describes an advantage. Momentum, path, entry. Guys, that's a trade. That is the highest probability trend trade you could ever take. These 3 rules only take 2 charts to prove true. You're going to have a large chart and a small chart. And honestly, that's about as technical as I like to get. Your large chart is a slow moving chart, guys. It's a very broad stroke of a brush, and it shows the overall opinion of the market. It takes the most current bar on the large chart to define direction, to define momentum, and to define areas, whether they are broken or potential trouble. Rules 1 and 2, your first two advantages come from that first bar. It's not a lot of reading. It's just simply two advantages, one bar. When the rules are true, when you do have rules 1 and 2 in place, when you do have momentum, when the path is clear, you'll turn your attention to the small chart. This is your entry chart. Don't forget that. This is your entry chart. Your core advantages come from the large chart. The small chart will refine the big picture. It'll pinpoint entries with rule number 3. And guys, by using a smaller, faster chart, you're going to reduce risk and it is going to increase profit potential. So inside of this one bar, you can see the yellow box. There's a pullback, a bounce, and continuation in a successful trend trade. All of this happens inside of there. It's the refinement process that increases the accuracy. We use two charts because I love this analogy. Who are you trading with or against? The big charts define areas, direction. The large chart is a reflection of the large crowd opinions, guys. And when we say large crowd, we mean the people that are in control, the people that are not you, the men and women with the influence, the money, the backing to create trends, to establish momentum, the same people that react at key areas that could turn the whole market the other direction. The large crowd typically wins, guys. The small chart, well, this is the small crowd. These are the fighters. They create what's called a retracement or a pullback. And it's a tiny little move counter to everything the large crowd wants. We use the small crowd's fight to pinpoint where their failure is most likely to occur. That becomes your entry for the highest probability trend trade. So we're going to keep it real simple, guys. We're going to keep it 3 rules, 2 charts. And now we're going to review the indicators that we're going to use to prove the rules true. So both charts will have areas. They do have a different role depending on whether it's large chart or small chart, but they all have names. Just learn the names. There's a divergence high line. It's a magenta line. It prints off of a pivot, and it says, hey, guess what? Loss of momentum. That's it. Divergence should become synonymous with a loss of momentum. You'll see it as a cyan line at a low. If you're not color savvy, guys, it's hot pink and baby blue. You're going to see Fibonacci resistance. These are red lines. When the market is going up, there are areas that can create a bounce. You're going to see Fibonacci support. When the market's trending down, these are areas that can create a bounce. You're going to see yellow 1-to-1s. These are fibs in the moment. And when the market is trending up, they'll behave as resistance. When the market is trending down, trading towards them, they can behave as support. And then finally, you'll see that mid band, that squiggly moving average that goes right through the middle, guys. You don't have to know how areas are created. You don't have to know the math that goes into them. Learn their names and learn how to use them on each chart. You're also going to have trigger lines. Now these show up in everything that you do. These are instrumental part of all 3 rules. There are 2 sets of triggers. There are small triggers. These are solid lines. 2 small triggers work together. They are a fast moving average. Large triggers, 2 dashed lines, they are a slow moving average. Pretty easy, right? Small, large. When they're all going up, they're going to be green. When they're going down, they're going to be red. So a little color coding there. Guys, we're going to use trigger lines to make sure that rule number 1 is true, that we do, in fact, have the advantage of momentum. We're going to use trigger lines up against those areas to define termination conditions on the large chart. And you're going to use large triggers from both charts, actually, on the small chart to define your perfect entry. So trigger lines will show up in everything that you do. You don't have to know the math that creates it, the average, the calculations. All you need to know is small and large. And now we're going to break down each rule one at a time. So as we go through this, guys, if you have a question, let me know. If you have a concern, let me know. If you need clarity, let me know. But we're going to start with rule number one because it seems like an appropriate spot. And rule number one says that the large chart, the 13.2, needs strong trigger lines because we want the advantage of momentum, because momentum is going to be hard to stop. So strong triggers is the exact same look. Large chart, small chart. Strength is strength. It's one look, guys. In an uptrend on your large chart, you'll know that it's an uptrend because your background is green. You'll know that it's a downtrend because your background is red. The only way you could ever have rule number one met is in an uptrend, both small and large triggers are green. In a downtrend, when the background is red, both small and large triggers are red. Strong triggers is one look. We're slow rolling today, guys. Strong triggers is nothing more than a separation. So your small triggers will break up and above the large triggers. Large triggers will be wide, angled in the direction of the trade, or in a downtrend. Small triggers will break below the large triggers. Large triggers will be down and wide. Guys, it looks like a pair of scissors that are open. It's the separation between small and large, whether it's a little bit of separation or whether it's a lot of separation. Separation between the trigger lines, small and large, lets me know that the odds are favorable for the market to continue in the direction of the trend. So every time I see strong triggers, my brain says the odds are favorable for the market to continue up, or the odds are favorable for the market to continue down. Strong triggers push a market in the direction of the trend. Strong triggers are what you will look to break key Fibonacci areas. Strong triggers are what we're using to even cover some of the mistakes or alter our plan to be maybe a little more aggressive because momentum on the large chart is incredibly difficult to stop. But when the separation goes away, when the small triggers return to and work their way back inside of the large triggers, now we have weakness. And when I have weakness, anything can happen up or down. So I really want you guys to play some word association games. Strength, odds favorable for the market to continue. Weakness, anything can happen up or down. You're going to use your language to create either excitement about going to the next rule or being comfortable embracing that 90%, doing absolutely nothing. And when you go look at NinjaTrader, the most current bar, my large triggers are up, but my small triggers are down. My colors don't match. Can you guys give me a why? Rule number one is not met. Does that make sense? I hope so. Separation is strength. And look, it breaks areas. And as they begin to return, that's where the weakness comes in. Separation is strength. You can see it break areas. Weakness right at an area, that's where the reversal comes from. Weakness right at an area, that's where the reversal comes from. Weakness right at an area, that's where the reversal comes from. Guys, rule number one is designed to allow you to say, I now have momentum. This is a market that's going to be hard to stop. Everybody good? Right on. Once I have momentum, I have to make sure there's nothing in the way. No termination conditions, guys. Termination conditions are Fibonacci-based indicators that may reverse the market, that may create an untradeable bounce, that may break. They're just lines on a large chart, guys. They're horizontal lines on the big chart. So these are where the large crowd makes decisions. These are where the men and women that control the trends, that establish the momentum, this is where they're most likely to enter, where they're most likely to exit, where they're most likely to fight one another. So to define a termination condition, it's two simple steps, two simple phrases. The first one is price reaches resistance. So in an uptrend, your price bars will reach Fibonacci resistance. That's the large crowd arriving at the area that could stop the market where they need to make decisions, guys. And once price reaches an area, we're done with price. We no longer need it. We don't reference it. It has nothing to do with defining a termination condition. Defining a termination condition is a product of where are my triggers. So if I reach Fibonacci resistance, if my trigger lines remain below that area of resistance, this is an area that is a termination condition. This is an area that could create an untradeable bounce. This is an area that could create a full reversal. This is an area that could break. The reality is I will never know. I'll never know what it's going to do. So my highest chance of success comes from simply not initiating a trade into an area that has been defined as a termination condition. So price comes down, all the momentum, nothing in the way, and then you can see that price reaches Fibonacci support. That's the first part in defining a termination condition. If I'm in a short position and price hasn't gotten there yet, that blue line is exactly where the market is most likely to go. That's a target. But when price hits it and my triggers remain above, now it's a termination condition. If I'm not already in a position hoping it breaks, absolutely no trades into the area. Does that make sense, everybody? Once you learn this simple concept, price reaches an area, triggers don't break, no trades. Keeps you out of the short, keeps you out of the long, keeps you out of the long. Oh my gosh, keeps you out of the long, keeps you out of the short. Gads and little fishes. Look at that. Can't do it, won't do it, shan't do it, not happening, can't go. Guys, rule number 2 is going to keep you patient. Rule number 2 is the most broken rules because it forces you into that 90%. Is everybody good with that? Awesome. So if it doesn't stop and reverse the market, chances are it may break. So this is what it looks like when areas break, guys. And it really gives you 3 options for trading or for your approach to looking for a trade. The first one is price reaches Fibonacci support. All the triggers remain above, and this is a termination condition. Rule number 2 is not met. The highest chance of success is just simply waiting for the reaction. But Mark, how do I know if it's going to break? You don't. Mark, how do I know if it's going to reverse? You don't. Mark, how do I know if the buyers and sellers are just going to fight there for an hour? You don't. So your highest chance of success, the odds are in your favor by doing absolutely nothing, because this is like the old Sex Panther adage, 60% of the time stops it every time. Trading in determination conditions can be proven to result in more losses than wins. But areas do break, and they break quite often, or we'd be range bound forever, guys. So there's a look when the small triggers absolutely smash through an area with odds favorable momentum, guys. This blue Fibonacci support. Yes, Wayne, we are. With this Fibonacci support, the trigger lines below, all the momentum. Guys, this area has the potential to break, but there's a pause sign because it is just potential. If you got a split, let me know when you come back. We'll get you taken care of. If you need feedback on that one chart before you go, okay, no worries. Sounds good, Wayne. Thank you for that. I wanted to go through and do a 101 as we start the week. Guys, this is your look for the potential to break when the small triggers smash with the best look on momentum, guys. And this is going to be the second trade in the plan that I give you. And this is what we call a medium probability scenario, because Fibonacci support isn't quite broken. And it's not broken until all 4 trigger lines, not price bars, all 4 trigger lines get below the area of support. Now the area is broken. Now the path is clear, guys. Support will behave as resistance. So strong triggers before you reach is the best of the best look. When you get to the area, you stop, you pause, and then you go when the area is clear. If this is where decisions are made, you're going to learn to respect them, guys. And rule number 2 remains intact until you reach the next line. Once you reach the next line, it goes right back to number 1. So in an uptrend, I like this picture because look where the market's coming from. Price reached Fibonacci support. Triggers remained above. Even though price gets a little lower, triggers are above. Price is a little lower, triggers are above, price gets even lower. And this is where new users are like, yes, the area is broken. It's not. Let your trigger lines tell the story. The market does in fact reverse. It starts to head up. Price reaches Fibonacci resistance. All the trigger lines remain below. Your highest chance of success, the best of the best to keep you in this game, is to do absolutely nothing, to wait for the reaction, to see if it's going to hold, to see if it's going to break. You'll get indication that it has the potential to break when the small triggers smash through, when you have momentum. Guys, this potential creates a lot of opportunity. In the trading plan I gave you, the second trade revolves around this, and it says that both small and one large must be above the area to have the best potential. But an area is not considered broken until all four trigger lines are above the area. Then that resistance behaves as support. Now your path is clear. And guys, your path remains clear until you reach the next line. And once you get to the next area of resistance, you're right back to number one. So if we look at a chart, small triggers below the large triggers, we have all the momentum. Two triggers are below the fib, two triggers are above. This area does have the potential, but it's not broken. Does that make sense, everybody? That's your in the moment read. Momentum is present, but the path is only potential. If you're brand new, once you learn these two, you have everything you need for the first two trades. But there will be times when your path isn't clear, when your areas are stacked, when it's fib after fib after fib, fib into one-to-one and a divergence low, guys. And this is 90% of your day, and I can't stress this enough. 90% of your day will be sitting on your hands waiting for those advantages, the best of the best. The futures markets trade an average of $220 billion hourly. The S&P futures market typically exchanges $174 million a day. You don't need to be in every move. Every tick doesn't have to be your tick. It's not necessary to be the first one in to predict reversals. It's not necessary to be the last one out. I think one of the things that they should put on every website, and they don't, is that there are 252 trading days in a year. If you average $400 in markets that trade millions, it's a six-figure income. Now, I would say the majority of the room is not making six figures with their trading yet. So rather than looking for all of the money, find the best money, guys. Find the easiest money. Find the money that gives you the advantage of momentum. Hold on, coming over here. That has absolutely nothing in the way. Define your perfect entry, and that's where we're headed. And guys, you can build a career from one trade based on 3 rules on 2 charts that you can prove typically wins 70 to 80% of the time. That's your path of least resistance. Ron says, yep, he knows it. He's done it. But it all begins with momentum, a market that's very difficult to stop. It needs to be coupled with a clear path, a market that doesn't have anything in the way that could stop that momentum. And once these two are in play, guys, once you understand these two concepts, so if you're new in my room, when you can define momentum with strong triggers, and it should take you a half a second. Watch this. Momentum, boom. That's it. Smalls below the large. 3 triggers through. Guys, that's your momentum look. And you have to define your path. I've only got 3 triggers through the area, but I haven't reached the next area. This market does have the potential to break. So what I need to do is go see if my small chart supports taking an entry. And I'm going to do that with a set of rules where when you learn the language, it is the most important thing. You are going to use a limit order, which means that you'll actually wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback. And if you remember, a pullback is nothing more, where's my picture, than that fight by the small crowd. Notice how the large chart says up, the large chart says strong, the large chart says clear path. There's your pullback. You're going to buy or sell a pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1, because areas can stop the small crowd the same way they can stop the large crowd on a large chart. And those areas need to be inside of triggers, guys. So I'm going to type it out in the room. I want everybody to look at the chat box. I'm going to buy or sell a pullback at an area inside of triggers. And if you remember that phrase, you'll call your shots long before your entry's ever taken. When the market's over here, you'll be saying to yourself, I'm going to buy a pullback at an area inside of triggers. When the market's down here, you're going to say, I'm hoping for the pullback to an area inside of triggers. When the market starts down, you're going to say, I'm not jumping in yet. I'm going to get in at an area inside of triggers, guys. Price returns to large triggers. You're going to use that to define the retracement. The moment the market starts pushing down, those large triggers define where it's most likely to go down. The areas inside of those triggers, fibs, mid-bands, yellow 1-to-1s, show you right where the small crowd is most likely to fail, so the market can continue in the direction of the large chart advantages. And it's just a pattern. And if you learn the process, learn the language, learn the phrase, entries become very easy, and you will predict them. So the reversal bar on the small chart begins the pullback, begins the fight. It is not your entry. It's rather a loss of momentum that says, hey, here comes the fight. Let's go define where the fight's most likely to be lost. Once the reversal bar prints, you can define where those down bars are most likely to go using large and synthetic triggers, guys. The synthetic triggers with steps, these are just the large triggers from the large chart. Price returns to the moving average, regression of the mean. So you're going to say to yourself, they may retrace somewhere from the very top line of these triggers to the bottom line of these triggers. I don't know if it's going to be the top or the bottom. I don't care if it's the large or the synthetic. That's my retracement zone. But trigger lines aren't bouncy, guys. You need an area, you need a fib, you need a mid-band, you need a yellow 1-to-1 inside of those triggers. So here's a mid-band, but I also have yellow 1-to-1s. I've got a little bit of a window. I call it the window of opportunity, because somewhere in that blue shaded area is where the market is most likely to bounce and then continue in the direction of the large chart momentum, continue in the direction of the large chart trend, of the large chart clear path. But I don't know which one it's going to be. So your entry for the highest probability trend trade comes a tick or two above the highest point of support, closest to the reversal bar, because your small or your large chart, guys, is just 32 flavors of giddy up to the north side. It is all of the momentum. And that's the picture that I get in my head. That becomes your entry. And because the methodology defines the retracement zone, because the methodology defines the most likely spot for a bounce, you're going to learn to ignore anything beyond those trigger lines, guys. When you get through everything that supports rule number 3, any line below the triggers is outside of the window. It's not an entry. Once you get below these trigger lines, you don't know if, when, or where the market's going to continue down. We make it both ways, guys. So in a downtrend, with strong triggers, with a clear path, the reversal bar begins to pull back. I'm going to buy or sell a pullback at an area, fibs, mid-bands, yellow 1-to-1s, inside of triggers, guys. It is a repeatable pattern. Anything beyond the triggers is where the market shouldn't go. This is where the advantage of rule number 3 is no longer in play. I don't want to be a part of it. I don't want to enter there. This is advantage gone. This is where stops go. And it's just a pattern. So when the large chart has momentum, when the large chart has the potential to break, everything is trading up here at 45. There's your reversal bar. There's your pullback to the area inside of triggers. There's your continuation right up to Fibonacci resistance. Guys, this is your pattern. That was November 6th, 2025. There's momentum. There's the 3 triggers through, potential to break. There's the pullback directly to support inside of triggers. And there's the exact same pattern from 2021. Momentum again, potential again, pullback to the area inside of triggers once again from 2022. So what you have now is a plan that you can prove wins more than it loses. You have a plan that only takes 2 charts, that tells you exactly where to find a met and gives you a checklist for entry. And great entries produce manageable trades, guys. Great entries reduce risk. Great entries increase profit potential. Are there any questions about a high probability trend trade? I tried to drag my feet a little bit through that one. Make sure that we went slow. Guys, your job is to learn how to identify strong triggers, clear path, and entry, and then piece them together to create the pattern. Let's see what this one looks like. Oh, wow. Momentum, potential to break, pull back to the areas inside of triggers, and money on the way down, guys. That's from December 22. That is exactly 3 years ago, and it's the exact same pattern that we just discussed. Pretty cool, right? So you're learning to be a chart reader. That's your goal. Whether it is NinjaTrader or whether it is TradingView. And now we're going to do TradingView. Quiet class today. I'm cool with that. I'm going to still slow roll it. It'll be an amazing video for you guys to go back and study if you need it. Guys, TradingView uses a little information analyst. I like that. TradingView uses a little different setup. So one of the things that you'll notice is different is TradingView doesn't have Fibonacci. TradingView has zones. Now there are free zones that you can get if you're not interested in dropping $50 a month, but it's my personal opinion, which is exactly worth what you paid for it, that if you really want to be a professional trader, doesn't it make sense to have the advantages? That's why you have the T3 indicators. Guys, the zones from Chart Prime are the best that we found. They're amazing. And you'll use them to define support and resistance. And you'll use them to define areas that you shouldn't trade into. And you'll use them to define areas you should be trading from. That's the key difference. Everything else is pretty similar. You're going to have one-to-ones and mid-bands, divergence highs and lows. The other difference, and this is kind of a throwback to what Nexgen was doing 20 years ago, is they are minute bars. Your large chart is a 15-minute chart, guys. It is a big, slow bar. It will be used to define direction, momentum, key targets, and terminations. It's the large crowd. And your small chart is a 1-minute bar. And it defines the immediate strength using the trigger lines, and it defines entry points. So large crowd, small crowd. The cheaper of the two, Samuel, I don't remember what they call it. Hold on one second. Let me get there so that I can give you the visual. I know it's the less expensive of the two. Oh, look at this. We'll see what Black Friday says too. And you still have 8 hours to do it. Oh, that's lifetime access. Is there a monthly? 50% off your first payment. Chart Prime Pro. Not Plus. Pro, not Plus. That'll get you in there. I'll get you guys the link to it too, just so you have it. I'm a fan. I'm a big fan, but I don't work for Chart Prime. Your $50 doesn't go to me. It goes to them. They're a third-party indicator, but they are effective. And I wanted to show you guys this real quick. I love doing this. We're about to talk about a trend trade. Um, Check yearly, it's only 20 bucks. Nice, Hamid. Thank you for that. Guys, we're about to talk about trading with the trend from an area with a close on the correct side of the triggers. We're about to talk about the exact same thing that Nexgen was teaching in 2004, 2005. This was trade number one. And it's number one for a reason, because it has an advantage. So big chart, little chart, direction, momentum, key targets, immediate strength, entry points. Everything goes back to momentum and path. So TradingView users, here's how you're going to read your large chart. And you know, I did this the other day and I'm going to do it again. If I blacked out all those words right there, this would be enough to say it's time to look for an entry, guys. You're going to define direction with which direction the small triggers are headed, whether they are going up or whether they're going down. And it's got to be one or the other. It's either up or it's down. And then you're going to ask yourself, do I have room to target? So I'm going to trade with the trend and I'm not going to trade into anything. Does that make sense? Once you have those two, guys, life is good. But I'm a little bit of an overachiever. Good morning, Miss Trina. How was your birthday? I haven't seen you since Mimosa Fest. Did you have a good one? Awesome. I love to hear that. So the second step in reading your large chart, guys, this is going to define the momentum of the move. This is what's going to let you know exactly how you want to manage this trade before you ever look for an entry. So once you define direction, and this is just that picture blown up a little bit, you're going to ask yourself, where is the current price, the highlighted price, in relationship to those small triggers that have defined my direction? And there's only three options. They're either going to be left, whether it's up or down, they're either going to be left, they're going to be right, or they're going to be inside. The price is going to be inside. And the location defines the strength. So if I am left of the small triggers, this is the strong side. There's that language again, strong. This is where 1 minute areas are most likely to break. This is where bigger moves typically come from. This is the odds favorable momentum, guys. And the left side of the triggers is where the market tends to run. Left side of the triggers is where 1 minute areas have a higher chance of breaking. They're not obligated to break. Hey, good morning, OG. You know we have the best tech guy in the business, right? Get with Jason from the main page. Are you on NinjaTrader? Do your charts look ridiculous with the triggers? Is that what's going on? Cool. Hey, before you do that, if it is like that really funky trigger look, right click on your chart and reload all historical data. There's something about the data, NinjaTrader Sunday night, I don't know what it is, but Monday morning is always a little cattywampus, which is a fun word to say. But if you right click on your chart and reload historical data, a lot of times that fixes it if that's the issue. If it's not the issue, then by all means, please get with Jason and let him fix what ails you. But I like to be a little helpful so you don't have to wait. Guys, strong side is the best. If you're on the right side of the triggers, price is down here below them in an uptrend, above them in a downtrend, you're on the weak side of the triggers. There's that word again, weak. Guys, this is where 1 minute areas are most likely to bounce. This is where I'm getting paid, getting out, waiting for the next one. This is still looking for a long trade or a short trade. But my management, I'm in tune with it. I'm excited about GTFO. Make some money, get out, wait for the next trade. And then finally, if I'm in that transition, if price is neither strong nor weak, I'm going to be very aware of my 1 minute areas from a management standpoint. I'm going to say to myself, what a great place to get paid, but maybe I'm going to hold a runner. Maybe I'm going to go break even on my second. And we'll see if they want to get through it, because what happens is in one bar on the 15, you can go from weak to transition to strong in one bar. But you can also go from strong to weak, or to transition to weak in one bar. You're going to see that consolidation. Is this morning, Phil? Cool, I'll show you guys something real quick. When your large chart goes sideways, and it did for quite a while this morning. It did for hours this morning. Didn't do a whole lot. You're going to start to see these zones stack a little bit. And when you see them stack a little bit, Phil, that's a great time, believe it or not, to go back to these ideas, right? If they are stacked from the weak side, maybe I'm not excited about it. But from the strong side, everything kind of lines up. That's where you may alter your plan a little bit to say, I'm going to give it a go. Does that make sense, Phil? Now, the very basic plan, not sure. So if I'm on the strong side of triggers, let's do a live read real quick. I like that you said not sure. Thank you for that. So triggers are up. I'm on the strong side of triggers. Does that make sense? Cool. Now, obviously, I hope it's obvious. I hate to use that word. What I'm hoping is that you're like, no way. I keep messing that up. There we go. No way on God's green earth am I trading into a brick wall, right? But let's suppose for a second, Phil, that brick wall wasn't there. Let's pretend. Let's use are you good with imagination, or do I need to remove indicators? I can remove indicators. Okay, cool. And you get the perfect pullback right to a mid-band, right to a zone, the perfect entry, but that damn green line is in your way. Phil, with a little experience, you might say, with the triggers up from the strong side, with the perfect entry, I'm willing to take a shot into that zone because the strong side lets me know that those 1 minute areas are most likely to break. My large chart is perfect. My entry is perfect. That's the only fly in the ointment. Does that make sense? And you'll be prepared to manage. Cool. And I think that's where we're headed, right? Remember, guys, when I give you this plan, it's a stepping stone. It's designed to optimize your chances of success. But I like having talks about the stuff beyond the basics, because the basics say that your 15-minute chart is not trading directly into areas. And it says that your 1 minute chart is not trading directly into areas. And then your entry is consistent, guys. Your entry is the same thing. And you know what? It's up. It's strong side. You have room. And you say, I'll take a shot. And Phil, that's the perfect example, right? And look what it does. There's your shot, and there's your bounce right off of it. So you've got to expect that. You've got to be ready for that. That's what happens when you trade into areas. Very often, there's a bounce. But when there's none there, it's an easier move. But that's the perfect example, Phil. And not sure what to make sure the green zone versus a red zone. Just let it be a zone. Just let it be a zone. If you see a zone, it's potential trouble. Good stuff. And then, guys, your entry is the same entry every time. This goes back to the idea of patterns. Your entry is a pullback, that fight by the small crowd, to a 1 minute area, to a zone, to a 1-to-1 or a mid-band. And then there's the magical close on the weak side of the triggers. So everything says up. Strong side of the triggers. Watch, we can use Phil's here as an example as well. Room to trouble. And it's the pullback that we're waiting for. It's that down move that we're waiting for. We're not just jumping in, hoping the market goes. We're saying, you know what? Let's go lower. Let's get more room to trouble. Let's have lower risk. And once your small triggers turn down, you can like put a circle or a box around the lower areas and you can say that's where my entry comes from. But the difference between TradingView and NinjaTrader is I'm not just jumping in at a mid band. What I'm doing is I'm waiting for an up bar that closes on the weak side of the triggers. And I'm doing that because reversals come from the weak side of the triggers. The market tends to change direction from that weak side. So I'm no longer fighting the immediate strength of the small chart. I'm on the good side. And that's where trend trade continuation typically happens. And it's the same look every time. First, it's the large chart read. The triggers are going up. There's a beautiful example of them being in transition. There are room to targets because there's nothing in the way. Large chart has done its job. I know what direction I'm trading. I know how I'm going to manage that trade. And I know that I've got room to manage that trade. On the small chart, the moment the small triggers roll, I can draw a box lower. And my rules say pull back to an area, up bar that closes on the weak side. And guys, notice that here it hasn't reached the area. This is an important part of the 1 minute chart. Let it get to something solid. It's like kicking a soccer ball. It's not going to bounce from space. They may fight a little bit, but they know about the area the same way you do. That's where entries come from. And same thing the other direction. First, it's down. I know what direction I'm trading. I'm on the strong side of the triggers. I know exactly how I'm going to manage it. And I've got room to trouble. So because the small triggers roll up, I'm looking higher, mid-band zones, 1-to-1s. And I'm not just getting in at a mid-band. And I'm not hoping that the mid-band holds. And I'm not wishing that things would start down. I'm actually waiting for a down bar that closes on the weak side with room to trouble. And guys, that's your trend trade entry. And you could honestly have the exact same look on every trade that you take during the day if you just follow the very simple plan. This morning, oops, go through my pictures here. John and I talk every morning. And what we're saying is if that breaks, awesome. And then I made this picture. And for you or for you guys that understand second higher divergences on NinjaTrader create bigger pushes, I made this picture. Guys, it's easy to dismiss the 1 minute areas because of the higher time frame read. And Phil, this kind of goes back to what you were saying. When I see an area that's not broken, it's very often going to give a push. It can give a push. So I won't initiate a trade right at the area, but what I will do is I'm very willing to trade to the area to see if it breaks. I'm just not initiating it right at the area. That's your highest chance of success. And if you do initiate it, as Phil did in that picture, and I don't think there's anything wrong with this picture, you have to be prepared for the bounce. You have to be ready for it. So I thought that was kind of a cool little thing there. And then this was from this morning. There's that same area that didn't break. It's still down. It's still the weak side, and there's room to trouble. And there's your pullback, and there's your down bar. And guys, it went right to trouble. And that was a pretty easy trade, and maybe someone in the room caught it. But that was a pretty effortless trade. That close below didn't give me any room. Sure enough, there's a giant bounce. Didn't close below, not a down bar below. When it finally was, it was a pretty easy trade. I was making eggs. I had to come back and see it. But guys, that's TradingView. It is nothing more than defining direction, momentum, path. Phil, this is your trend trade? 70% as advertised, right? Average trade 423. That's not so bad. Close P&L 8,600. That's your last 20 trades. And high impact news in 2 minutes. Thanks, Andy. Phil, I feel like you could build a career around those stats. Now you got to go get you a couple $150,000 accounts in Nexgen Pro Trader funding. I believe they're still 90% off for the Cyber 90. Let John credit all your activation fees back. Go make that money. You have a plan, guys. No, they are not. What do you mean, no, they are not? Help me out, Victor. Incomplete thought. Yeah, that's everybody's challenge. No, they re-upped it for Cyber 90. They re-upped it, Victor. For Cyber Monday. That's okay. You didn't miss anything. You didn't miss anything. And Phil, I think that's the biggest challenge is, can you sit still when there's nothing to do? Can you embrace the idea? Uh-oh, Ninja Trader crashed. Can you embrace the idea that it's okay to not be in every move? Can you embrace the idea that every tick isn't your tick? And guys, that's the hardest part about trading. I'm going to tell you right now. The patterns are easy peasy. It's not difficult to recognize the patterns. What's difficult is to sit still if your rules aren't met. If you're trading into an area, if you don't get the pullback to an area, if you don't get the close on the correct side. The most successful traders that I work with every day, guys, they're not the people that are in every move. They're the people that are in the best moves. They're the people that are taking the highest probability. Only job, you know, where lazy people do better. You know, John used to address the class, and this is exactly what he would say. John would say, if Elon Musk called you up and said, hey, I want you to come work for me, but you're going to sit in a room for 7 hours and you're going to push a button 5 or 6 times during the day when a set of conditions are met. I'll pay you $250,000 a year to do that. Is there anyone in the room that wouldn't say, hell yeah, I'll take that job, 100%? Yes, I will take that job. And who knows, maybe because you're working for someone else, you might even be successful in your career. But I would say 99% of you would get fired in the first week because it's hard to sit still. It's hard to do nothing. Guys, trading isn't difficult. Entries aren't difficult. Management from great entries becomes pretty effortless when you have a written plan. The challenge is sitting on your hands and doing nothing. It's like running stop signs, right? The stop sign is there. You know that it's there. Everything about it says stop. You could get hit by a semi. But traders go, F it. I'm going to go and I hope nobody's coming. Right? And then you get hit by a semi and you blame the semi. You call a lawyer and say, oh, semi hit me. And the lawyer says, dummy, you had a stop sign. So my job is to teach you to see the stop sign before you pull out into traffic. And if you don't have momentum, there's a chance it's going to push lower. And if you hit support and all the triggers are above, well, heck, there's a chance support's going to hold and the market's going to go up. But you got to piece it together and give yourself the best, the highest chance of success. So that's my first hour, guys. It's a little lengthy this morning, I know. I wanted to go slow. I wanted to make sure that you guys that are new really latch onto the idea The trading doesn't have to be difficult. You've got to learn to use the tools. I've mentioned before that I'm horrible with analogies, guys. Having next gen software is like going out and buying $5,000 worth of Snap-on tools and believing that because you purchase those tools, you're going to be able to overhaul an engine. You're going to be able to replace the top end. You're going to be able to take care of all the connecting rod bearings. And the reality is, guys, is the tools are just that. They're tools. You've got to learn to use them. So learn how to identify momentum. Learn how to identify when the rules say absolutely no trades into an area. Learn how to identify your perfect entry, your pullback to an area inside of triggers. Study it, practice it, get good at it, and incorporate it into your daily life. And you'll be amazed at how easy trading can be. So I'm going to take 5 minutes. I'm going to go stretch my legs. Oh, Ron and Victor, and any more of you Southern people, I wanted to share this because I thought it was really funny this morning. My wife sent me a message. My wife arrived in Georgia last night for her new job. I'm going to be a couple weeks behind her. And she goes, "Oh my gosh, I miss the South." She said, "So far today, I have gotten a love, a darling, a hun, and even a sugarfoot." And she's like, "Oh, I miss the South." I thought it was pretty funny because if you're from the South, you can hear every one of those in the proper accent. So good stuff. Good stuff. All right, guys, I'll be back in about 5 minutes. Stretch your legs, work up some questions, try to stump me, make it fun. And then we're going to go through the charts that have been posted, and we'll talk about those advantages. The one thing that I do ask, and I want to do this real quick. Oh, yeah, that's her line. Bless your heart. In her job, that's her line. Guys, every time you post in my room, do me a favor. Talk about what you see. Not because you're seeing, I mean, it can be your trade, it can be a trade. But if you define momentum, terminations, and entry on every chart, guys, what happens is you start to create that correlation. You're telling me what you see, and I can make sure that you're reading them correctly. And that's my whole job. My whole job is to make sure you're reading your indicators correctly. My job, here's my picture, I'm not the trade police. I don't want to be the trade police. That is a burden that I don't need. So if you trade it into a termination condition, tell me. Trade it into a termination condition. I'll manage assertively. If you trade it without momentum, say, hey, I didn't have momentum. I relied on the other two. And if you get to that point where you're always talking in terms of momentum, path, and entry, you know when something goes away and it goes to medium. You know when multiples go away and it becomes low. And guys, you're in control of the entry. Nobody can make you enter the market. Nobody can force you to fight that trend to trade into those areas. 90% seems to be available. Yeah, it sure is, Samuel. Absolutely it is. When you know what's working for you and against you, it helps you make decisions, guys, not only on your willingness to enter, but more importantly, how aggressively you may need to manage it. If you look at your charts and say, oh, it's medium probability, I'm going to manage a little more assertively. Or you say, whoa, it's low probability, and you still decide to take it, I hope you're looking to GTFO, ASAFP, and I think you know what I just said there, because you're in a position that can't be proven to win more than it loses. I hope you're going to manage super assertively, but I don't tell you which one to take. I just teach you how to read those indicators so you can make good decisions. So I'll be back in a minute. I've threatened it 3 times. I'm going to do it for real this time. When I come back, I'll click on all the charts. I'll see you guys in 5. All right, y'all, let's get busy. I put the little Cyber Week coupon thing down there for you. And we are going to look at some trades. Not a whole lot going on today. Wayne, are you back with me yet? I'm not going to click on Wayne's until I am sure he is here. Well, at least Pete is trading today. I guess that's a good thing. One from Ron, another one from Pete. Adam P. Another one from Phil. I like it. Another one from Pete. Your patience is on point. I love that. It's not always easy to do, Victor. So good job. And guys, you're going to notice some days just patience of Job. Some days you're like a ferret that's been drinking Red Bull, and you got to recognize. You got to recognize. I like this. When we talk about momentum and path, Pete says, check it out, Mark. Strong bottom, which is a termination that reverses the market. Odds favorable momentum. And Pete says, I can't seem to get a trend trade entry. I'm going to jump in above trouble, and I'm going to get out at trouble. And just outstanding, Pete. Great trade. Nice way to get the week going. Ferret on Red Bull. You like it? Weak top, but a second lower divergence, Pete. It's an awesome indication, I think. Odds favorable momentum, potential to break, getting in below trouble, and then getting paid on the way down to the next level of trouble. Just absolutely perfect. And guys, look at that. Jump the fudge in based on the large chart. Well, what does the large chart say? Down with nothing to stop it. And just amazing. Great trade, Pete. You guys are going to give me a good highlight reel today. Good highlight reel today. And it looks like you got out somewhere down here. And then the market pulls back and you're trading directly. You say 3 triggers through the 1-to-1s, but you don't have any momentum pushing it, Pete. And sure enough, it pushes up to the wrong side of the triggers. And guys, let me show you what Pete did here, because I think this is pretty cool. And this is what happens when you learn how to read your indicators. And Pete, always correct me if I say something wrong. Pete says that my large triggers and small triggers are down and below that area of resistance. So what does that mean? That means that that area of resistance is a textbook termination condition, more likely to stop the market than it isn't. Does that make sense? Everything says down. The 1-to-1s have the potential to break. And when price pulls back to this area, it's the same area here, with every trigger below, that area is more likely to create a bounce down than it is to just arbitrarily break up. And Pete says, I'm going to catch it on the way down. And I'm going to get paid quickly because it's into trouble without momentum. And I'm not going to sit and hope. And if I pull 120 bucks out of this one, that's cool. 120 bucks 4 times a day is a 6-figure income. And guys, this is how you will kind of begin to reverse engineer. You'll say, okay, everything says down, and there's my retracement to resistance. What is the language from termination conditions? This area is more likely to stop the market than it is to break. The triggers are down. It's more likely to go down. And then Pete lets it hold rather than catching it on the way up. He catches it on the way down from the area. Nicely done, Pete. And that's one of those things where it's not a high probability trend trade. He's from the wrong side of the triggers, but because of his understanding of the basics, he's able to move forward and create more opportunity. Triggers are up, 3 triggers through, pull back to the area in the retracement zone. Easy money. Easy money. Just a beautiful trend trade. Starts with momentum. Make it bigger. First, it's momentum. Then it's 3 triggers through. Then it's a pullback directly to a mid-band, right in the retracement zone. And off it goes. Whew, finally, someone other than Pete. Just kidding, Pete. I love it. There's a reason you're so good at what you do. You've been here for 10 years and you still post in the room and you still annotate your charts and you still talk about what you see and why you see it and what it does for you. Guys, that's what professional traders do. They don't ever say, I can't wait to make the money. They say, this is how I'm going to make the money because it's consistent. Victor, triggers are up. You're on the strong side of the triggers. Your entry is at 48, which means you've got tons of room to get to trouble. The market pulls back to the zone. There's your first close on the correct side. Actually, there's your first close on the correct side. Didn't take it. Second close on the correct side. Didn't take it. Then they get a little fluctuation. Third close on the correct side, and Victor's like, yeah, okay. I like this one better because it's on the good side of the mid-band. And sure enough, easy money, Victor. What a great trade. 575. There's a lot of people that could stop right there. Go play golf. Do anything other than give it back. Goals met. Outstanding. Momentum. Potential to break. Get in above trouble. Get out at trouble. Manage it. Right at trouble. Perfect again, Pete. Really? Momentum, room to trouble, in after trouble, out at the first sign of trouble, balance off with a loss of momentum. Rinse and repeat. Not one trend trade in Pete's arsenal. Not one high probability trend trade. But everything he's done so far has begun with momentum and at least the potential to break. And that's what I want you guys to get. It all revolves around momentum and path. Everything he does. Mark, thanks for the high probability trend trade training. Showed me how to read charts way better than I could have otherwise. Ron, I love this. Ron will put these in so you guys remember. That's the easiest way to do it. Momentum, above trouble, all the momentum. Just get paid. Base hit. Base hit. I told my brother, go watch Moneyball. He still hasn't seen it. Guys, if you've never watched Moneyball, ladies, congratulations. It's Brad Pitt. Have fun. Guys, you could probably get your wife to watch it with you because it's Brad Pitt. But it's a good story. And it's all about the idea that base hits win games. It's not the home run hitter. It's not the all-star. It's the people that get on base. And Ron's plan and Pete's plan, just perfect. So there it is. And then trying a momentum trade without momentum doesn't work. There it is. That was your sound effect, Pete. Momentum trade with momentum, the market continues up. Momentum trade without momentum, I'll be damned, it retraces. Pete knows that. But Pete says, with this look and the potential to break, it's probably just going to turn into a trend trade. I'll take the trend trade. I'll get paid at that trouble, and I won't hold for dear life because it's not perfect. I think that's an avoidable loss. So, and Pete's heard this more than once. So this is for the rest of you, not for Pete. Separation is strength. Whoops. Separation is strength. And if I'm gonna take a trade dependent on the market just pushing, I need strong triggers on both of my charts. And it's a simple little thing, but I'm going to tell you something. When your whole morning has been win after win after win after win after win after win, that doesn't phase you. It doesn't shake you, and 4 bars later, you're in the right trade. So, 2 ways to look at it. When you're stacking it, who cares if I give up 5 ticks? That's trading. Losses are a normal part of a positive equity curve. He took a shot because the market was rocketing. It didn't work. So he took the best trade. I like it, Pete. I'll bust your chops a little bit, guys, but I'll also celebrate victories. Did I manage this trade correctly? So let's see. Gave it a bit of room because of the triggers, nothing in the way, but eventually got stopped out. Re-entered the trade on the second small pullback, not in the first because the triggers were green going back up. All right. This is Adam, right? Adam, are you in here with me? Yeah, awesome. So let's do it this way. I think you're gonna like this. Actually, you know what? Your large chart's perfect. Nice job. Everything about your large chart said look for the long trade. Are you comfortable with the large chart read? And I know that you have the auto system. I'm struggling over here. Hold on. Get off of there. There we go. No worries. So let's go to language. If the rules say, and guys, this is why it's so important to learn the language. My rules say, make my font a little bigger, that I will struggle in front of everyone. I will buy a pullback, and I'm going to make this bigger, don't worry. I will buy a pullback at an area inside of triggers. You guys remember when I told you when you learn that phrase, it'll set you free? So let's do this. Let's make that so it's not microscopic because, you know, some of us are older than we want to be. Weird font. I don't know what happened here. So buy a pullback at an area inside of triggers. Adam, your entry is rock star. 100%. Does that make sense? There's your pullback at an area inside of triggers. So I want to go through the idea of where your advantage lies. And you're going to have an aha moment, Adam, and this is going to be fun for us. So are you comfortable with that language? Buy an area inside of triggers, buy a pullback at an area inside of triggers? Cool. So basically what we're saying with that rule is that if I'm inside of the triggers and I have areas with that large chart look, I'm in the area where rule number 3 is still 100% in effect. Does that make sense? So your entry is perfect, and the area defined as where the market shouldn't go is down here. So your stop doesn't necessarily make sense. Because do you see how you got stopped out at an area inside of triggers? You literally exited the trade right at the perfect entry. Does that make sense? It's hard to sit through this stuff. It's terrifying to sit through that stuff. But your exit could be defined as the perfect entry. Let me know if that makes sense. But there is no first divergence, right? It's just a little push, but that's okay. You get in, you're out break even, no harm done, right? So Adam, This reversal bar right here that closes on the other side of the triggers, perfect reentry. Because you still have all the large chart advantages. You've still got all the room to trouble, right? It just pushed a little lower. I love it. I think you could have gotten in a little bit sooner, but even where you got in, who cares? Show me in your rules where it says triggers can't be read. Uh-oh. Let me show you something cool, Adam. Thank you for saying that. Are you ready? You're going to love this. The perfect trade, the triggers are red. Hold on. The perfect trade, the triggers turn red. Perfect trade, triggers turn red. Pretty cool, right? Adam, the true story is that we all have to go through that one comment to get us where we need to be. The momentum, did it ever change on the large chart? It never did it? Those triggers stayed up and strong through all of this nonsense. Those small triggers turning down is what got you to your beautiful entry. Does that make sense? Awesome. I'm telling you, Adam, that is one of the biggest deterrents for new users, because they say, the colors don't match, I don't have momentum. But you've got to remember that it's the large chart, that it's that big old chart that is going to define your momentum, and it's going to find your direction. And here's a great example of it right here, that original picture. Everything says down and strong, and this never blinks, but look at the triggers again. That's what gets us back to the perfect entry. And this is how you just went next level, Adam. It's a beautiful trade. You talked yourself out of it, but then you got back into it and you held it for the victory. I love everything about the trade, and I think that the management lesson is outstanding. And it's hard, isn't it, to be up a couple hundred and watch it come back down and be okay with it? But if you're really leaning on those large chart advantages, these holds become a lot easier. Does all that make sense? Post trading plans, but can you post those again? I need to fine-tune mine for the management part. For sure. So, and remember, Adam, that your management is going to be dependent on your great entry. So you have to know what kind of trades you're taking. So if I give you the KISS plan, right, and you take a high probability trade, there's a little management idea for it. Yeah, but even on and then if it's a medium probability trade with the potential to break, it has a different idea. So I'll drop that in there, and let me know how I can be helpful for what you're doing with the NASDAQ, Adam. And here's the deal, and I hate, there's a reason that I teach on crude oil and the S&P. Because on the NASDAQ, and this is exactly what yours did, you took the perfect entry, it retraced and hit those small triggers, and then it continued right back down. Do you see it? The one thing that people forget is on a NASDAQ, guys, this is a 34.5 large chart, not a 13.2. It's 3 times bigger. This is a 13.2. This is the exact same size as your large chart on crude oil and S&P, Adam. These small triggers do carry a little extra weight to them, but it doesn't change the idea that is, in fact, your entry. Where the market shouldn't go is still the same. But you can use those trigger lines a little bit more in the NASDAQ. And let me show you the picture. And I've just got stuff open everywhere. This is the lesson that I took from the NASDAQ, and I'll give you this picture. Or it's in the spreadsheet as well. Let me copy the hyperlink. Maybe not. So if I get to my area for entry, and guys, this is NASDAQ specific. Adam, this is for NASDAQery. This is not ES. This is not crude oil. If I get to the area for entry and my small triggers are a full bar away from me, above the reversal bar marker, I'm in at the area every time. But once those small triggers are less than a full bar away, below the reversal bar marker, I wait for a close on the weak side of the small triggers because I don't want to fight those 13-2 triggers, because look what happens even on the way up. They pull back right to them. That's your beautiful momentum entry, right? And until they close on the other side, that market continues up with all that strength. And then it pulls back to the area. Small triggers are a full bar away. I'm in at the area. And then there's your continuation. And that's on the spreadsheet. Adam, let me drop the spreadsheet one more time for you. But the KISS plan is designed for crude oil and the S&P. That is the one little caveat, if you will. Let me read what you said real quick. So you're only trailing your stop on a second divergence since that actually never happened. Should have left the stop below the pullback. Yeah, so hypothetically, and that's all we can do historically, right? Hypothetically, those pink 1-to-1s aren't broken. But you do have all the momentum. It's coming from a termination. Everything is up. No divergence, perfect entry. One divergence, you could take the exit with the divergence and be willing to re-enter, and that's okay. That's your right. It's a little different because you don't have the perfect large chart. So your exit makes sense, right? Your re-entry makes sense because the large chart's not perfect. Does that make sense? But one of the things with the automated system is when you get the perfect signal and the small chart's perfect as well, that's where I'm just holding, because it's more likely to do everything it says it's going to do than it is to not do it. So if you want to manage in there like that, totally cool. The only coaching on that would be, Adam, that close on the correct side of the small triggers, it gets you in about 5 points better. Does that make sense? Great picture, man. Great lessons. Thank you for this. Good stuff. Good stuff. All right, let's see what we have here. Seeing nuclear momentum, but right into a zone that's rejecting price at outer band. Not the best of the best. That's a little John Novakism, Phil. Nuclear strong. I love strong triggers. I do. You can tell when you guys have been around for a while and you get that John Novakism. This is what I think about strong triggers into areas. There's my picture. Morgan, thank you for that. I'm still using it. Guys, I don't care how strong your triggers are. If you've got nowhere to go, you've got nowhere to go. And that's a great example. There's just nowhere to go, and look what it's doing. Now, Phil, the other side of this is, what if they get a running start, right? What if they pull back to the area, close above, give me room for a retest? Well, then my rules are met. And with these 15-minute bars, it could retest an area 4 times. Let's see what it did. There it was. There was your entry if you were going to take it. And then you had to be out right there. And then blah, 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 blah. And it just never does anything. Terminations for the win, right? Isn't that awesome? Terminations for the win. And then Pete, your next picture shows the 15-minute zone. It will move. But you were trading inside of the zone for 3 losers. Man, I'll get to your next picture and we'll look at it. And we'll talk about it, Phil. Market reverse from nowhere, strong triggers, momentum style entry, out at trouble, out with a loss of momentum, miss the mid-band entry, get in on the way down, make money, out, Pete, rinse and repeat, right? Rinse and repeat. All right, Miss Trina, followed by a couple Boaz, and then Phil will get yours, and we'll talk about it. We will talk. All right, downtrend, strong side, room to trouble, pull back to the area, close below, so you're in at 78, which gives you room. Does it? 78.7 gives you $70 to trouble from the strong side. Area more has the potential to break. Closed out at 74, outer band. Absolutely beautiful, Trina. You had 70 bucks to get to the potential trouble, the same one that held, but from the strong side and room, it broke. You didn't trade directly into it. Maybe a little late on your entry, but it was moving fast. Great trade, Trina. It looks like 79-ish, which is 78.7. It's close, right? 79.2, maybe 79.7. So maybe, did you think about it a minute, or was it just that fast? Sometimes it's just that fast. You thought about it. Thank you for saying that. Thank you for saying that, because I'm going to turn that into a lesson for everybody. Not full. Golly, that font. Get off of there. We'll do. Not fully trusting your rules creates hesitation. Doesn't it? I mean, it all does. It does for all of us, Trina. So was this perfect? The answer is yes. It was down strong with room. It was the greatest look you could ever have. Can we agree on that? Everybody trading TradingView. Can we agree that when you have strong side and room, angels sing and unicorns dance? And Trina, right here, you should say, because my trigger's rolled up, I need an area and a close below, right? And it does, and it pulls up, and there's your area, and your close below doesn't give any room, and you say, okay, not my trade. And then it pulls up, and it gets the higher area, and it closes below, and you should be calculating room from your close below when this is happening. Does that make sense? Like when this starts happening, you're starting to do math. All right, if it closes down here, this is how much room I have. I've got tons of room. I can't wait to take it. And that's one of the cool things about having a methodology that is so predictable, that is so repeatable, is you'll begin to know exactly what you need all the way over here. And until it happens, you're just calm. But when it does happen, you can't freaking wait to take that trade. Does that make sense, Trina? It's still a beautiful trade. Don't think for a second that I'm giving you any negativity here. It's a beautiful trade. But I want you to have that extra point. And this was the same example. John and I were watching it this morning, and it was down, and it was room, and that close didn't give room, right? And that close didn't give room, but eventually it did. And once it did, oh my gosh, wild horses should not be able to pull you away from the perfect trade. And that goes back to the idea, and this is why Phil's probably not going to miss trend trades. Phil knows that he's got the opportunity to win 70% of his trades. Well, don't calculate where you need to get in. Because then what you'll do, Trina, is you'll say, I better get in before the close because it gives me room. Does that make sense? If I get a close below my triggers, how low can it go before I run out of room? I think that we were saying the same thing, though. Awesome. And again, with the perfect large chart, even a little hesitation produces beautiful results. Nicely done. All right, Boaz, great bottom. Thank you for noticing. 3 triggers passed. Well, let's talk about it. You guys want to see something? Directly into a termination condition, right, Boaz? Price reaches a divergence high. None of the triggers break. Does that make sense? So again, what we're doing is we're saying, look at this. Termination condition stopped it. Termination condition stopped it. Termination condition stopped it. Termination didn't break. Termination stopped it. You're in a range-bound market, 100%. Can't do it, won't do it. It's trying, it won't. And then you get this magical moment from that termination where every indicator agrees and you get the perfect entry with really low risk and confirmation. And from your entry, and your entry would have been about 72-ish, you had 3 or 4 points before you ever got to trouble. You had room to manage if something changed. And nothing changed. So you were able to take and manage, get paid at trouble, and then make a little extra money at the higher trouble. It's a beautiful trade, Boaz. There were more advantages than disadvantages. Between the strong bottom, between every indicator up, between the perfect entry, and look at the momentum. Love it. It's a great trade. But guys, I told you in the room, if you trade into a termination condition, I'm going to tell you. Because if you didn't see it, if you didn't notice it, I want you to be aware so that you can manage your trades. Whew. Momentum, everything down. Another beautiful entry. And more money. Slow to get out for a second. Great trade again, Boaz. I like the confirmation, but did you catch the lesson? Boom, 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 boom. When the large chart is perfect, and it was, when I get to my area for entry, and the small triggers are a full bar away, below the reversal bar marker, Boaz, it's typically a better entry up here. Because these are 26 tick bars, right? When those small triggers can't even follow, I love the area. And there it is again. When the small triggers are more than a full bar away, the area inside of triggers, it just gives a lower risk entry. And then if they behave as resistance or they behave as support, you've got room to manage. But I think for you NASDAQ traders, that's a really big one. Because the NASDAQ is fast and there's a lot of overrun. And that's one way to mitigate it a little bit. Great trading. All right, Phil. Momentum up. Didn't clear the zone. 3 losses in that zone. Yep. And Phil, this is one of the big differences between fibs and zones. And I think it gets a lot of people because there's a top of the zone and there's a bottom of the zone. And there literally is a point where you've got to be above it or you've got to be below it. But when you're inside of it, you're literally knee deep in where all those decisions were made. And I think that we all take those losers saying things like it should break, right? It should break. It has to break. It needs to break. So for me, the 15-minute becomes a non-negotiable. The 1 minute is where you guys may find yourself getting a little looser. And here's Ron. Ron says, check it out. With all the momentum, with nothing in the way, with all the momentum, can't take a momentum trade without momentum, I could probably make 112.50. Have you guys noticed that Ron takes 112.50 on the trades that he presents? Or that Ron takes $110 on the trades that he presents? 137.50. Ron, don't correct me in front of the kids. Okay, come on. This is the S&P. So on the S&P, Ron takes 137.50. Every time. Every time. Predetermined. Predetermined stops. Predetermined targets. What if Ron takes 4 of those a day? That's it. What if he does that every day for a trading year? That's a pretty good. Not bad, right? Buy a new Harley every year. Buy a new Corvette every year. Based on doing nothing for as long as you can until it's time to do something. Great trade, Ron. Guys, that's it. Momentum and path. Once you figure that out, once momentum and path become second nature, there's a lot of opportunity. All right, Miss Claire. Up, strong side. You are into trouble, right? That's all I want you to notice, Claire. Buy a buffet of 69 Chargers. There you go, Jeffrey. Careful you don't get your mullet caught in the door. So Claire, do you see that you did trade directly into one-to-ones? I just want to make sure that you see it. But I want you to see what she did, guys. She said, okay, perfect entry on the small chart, low risk. I'm willing to take a shot because of the strong side. Ooh, they tapped you but didn't fill you. I don't like it when that happens. Tapped you and didn't fill you at 495. This is where, and it's just me, Claire, I don't know if you're listening or trading. If I get tapped and not filled at an extreme, I'll pull my stop up maybe behind the zone. I might give a little bit back, or I'll just close it out because I knew where I needed to get paid. And we're getting paid there because it can create a reaction. And it is creating a reaction. Sometimes it did fill. Awesome. I'll go really, really tight. They can go second test it, or they can, but I won't give back. I won't give back 18 points on it. Yeah. Because that seems to happen. There's nothing worse than getting tapped and not filled and then giving it all back. Because our targets, and Claire, your targets are so good, they're at the point where the market should go. So remember that you're in charge of that. All of the trouble. Triggers are up. All of the trouble, Claire. White bar. All right, I see it. I'm not sure that I've got any rules for this one, Claire. You're on the weak side of triggers at a pivot stop out into 2 zones in a VWAP. Your smalls haven't broken above the large. And I know that you have the termination here. I'm glad it worked for you. I'm glad it worked for you. I count an enormous amount of trouble. And by the time you entered at 06, you're 56 points from the termination condition you're identifying. Does that make sense? Yeah, I'm glad that one worked. That's a tough, that's a tough one. But you believed in it and it got you. Lot of challenges. And guys, one of the things that I'll do is I won't say, damn it, Claire, I can't believe you did that, right? That's not my job. My job is to say, did you notice the VWAP, which is like a brick wall? Did you notice the zone, the next zone? Did you notice that it's coming from a termination? Did you notice that from your entry there was nowhere to go? And guys, I have a history of taking trades like this, and they give it to me just enough to make me think it's a good idea. And Claire, I hope this doesn't happen to you. And what I find is that once I believe the adjustment to the rules is the right thing to do, I put myself in a position where I'll start taking it 3 or 4 times. It has to work. It has to go. It should go from here. That area should break, right? And Claire, mine was a little different than yours. There's one from the weak side with a clear path, 28, 29, really no room. They're just messing with us right now a little bit, bouncing. I love that you capitalized. I love that you got it. I really do, guys. I get excited for you when you win, but I don't hesitate to say, hey, might have pulled one over on the market this time. You guys remember Pete's reverse engineering? If everything pulls back to support and all the triggers are up and above it, support's more likely to hold. And it did just that. Pretty cool, right? The basic language pays dividends. All right. So we have an hour left. I'm going to take a break again. I'm going to go refill my water. When I come back, guys, we're through all the pictures. So I need you to help me have a great classroom here. I need you to ask me some questions. Hey, Mark, I'm working on this. Hey, Mark, what about that? Hey, Mark, I'm looking at this new trade. Here's my rules. What do you see? You can do that too. I love it when you guys do that. So I'll be back in about 5 minutes, guys. Go stretch your legs again. I'll pull my iPad out and just scribble and just draw. Work on designs for people. Just anything other, scribble, yippers, anything other than taking trades that don't fit the rules. Did you guys know that if you prove, here's something a lot of people don't realize. You use Etch-a-Sketch, you are gifted and talented. Did you guys know that if you can prove beyond a shadow of a doubt that a trade wins typically 70 to 80%, that if you don't follow the rules that proved it wins 70 to 80% of the time, that you don't get the same results? I know it sounds silly, but people they'll say, well, it's not exactly a high probability trend trade. Was this just a cost of doing business? Is this part of my 20 or 30%? It's like, well, your 20 to 30% went out the window when you didn't have room on the large chart. And your 20 to 30% went out the window when you didn't wait for a close on the correct side. And your 20 to 30% went out the window when you entered on the wrong side of the triggers. Did you guys know that almost doesn't count? I almost had momentum, but I didn't. I almost had an area inside of triggers, but I didn't. Almost is deadly. Almost is almost as deadly as it should. Isn't that, see, Phil just said, since you guys can't all see in YouTube land, it's nice to miss losers because of following the plan. And Phil, I think that missing losers is as important as taking losers as you learn the plan. Because what does it do? It creates trust. And what happens when you trust? You don't hesitate. It's either rules met or rules not met. And I think it surprises a lot of people. We'll watch TradingView, right? And as the market pulls back, if it gets to the mid band and to the zone, are the rules met? So here's the question, guys. Triggers are up. I'm on the weak side of the triggers. I pulled back to an area. Does it fit the rules if I get a close on the correct side of the triggers with room to trouble? There is the one-to-ones. So my entry can't be below those one-to-ones, right? Does it fit the rules? Not how do I feel about the termination? Well, maybe not with weak triggers. Just does it fit? The very simple recipe. And if you're not sure, let's go back. 15-minute not trading into an area, 1 minute not trading into an area, buy or sell a close on the correct side of the triggers. It does fit the rules, doesn't it? Does everybody see that? It absolutely, positively, without question, without hesitation, would fit the rules with a close on the correct side. Does it guarantee a winner? No. But it does guarantee that I'm trading a pattern that typically wins more than it loses. So you guys want to wait and see if it gives us an opportunity? And if you're a brand new user and you're working through this methodology, right? And you're working through the idea that I want to be consistent, it's not in my rules, is it, Phil? My rules don't say anything about where the market is coming from. My rules say that if the triggers are up, if I have room to 15-minute trouble, and I'm not trading into 1-minute trouble, it fits. Now, from the weak side, I'd have to manage, right? But a lot of the times, Phil, they're not going to give you a shot anyway. We'll see. But I would need a close up here, 34.50. I want to be above that trouble, right? It's pulling back to the trouble. It broke below it. So it's a little different look now. but I'm not worried about it. If it closes above, we're going to take it. And because it's weak side, we're going to manage out at 38.75. That's only 4.25 points. That's not a lot of money. Is it worth it from the weak side? With 4 points to trouble? Here we go. 3, 2, 1. There's your entry. Stop has to go below. Profit has to be at trouble because I'm on the weak side of the... Oh, look at that. They just realigned the zones on me. That's messed up. That's messed up. I'll go break even because, well, now I'm above it. But you see how that changed? That changed the dynamic, without a doubt. But once you got the close in, life was good right until that zone changed. So I had room to it. It's okay. And if you want, take the trade, right? Put your stop loss in the right spot. Put your profit target in the right spot. And just say, you know what? I'm going to sit on my hands. That's the S&P. I'm going to sit on my hands and see what happens. I'm going to see if it goes up or down. I'm going to see if those up triggers really do help up. I'm going to see if having room where I did have room to the targets is an actual advantage, right? And no matter what happens, guys, it's paper trading.